I'd like to talk to you about the tax advantages of running an electric car through your company. So, in order for us to really look at that, we need to have a look at three different types of tax because they're the grounds upon which we can judge whether it really is worth doing it anymore. So first of all, let's take a look at corporation tax. Now, generally speaking, there are two ways we can get the car into our business. We can buy it or we can lease it. If we're going to buy it, then the way we will be reimbursed, if you like, for our tax expense is through what we call capital allowances. Now, the difference between an electric car and another type of car is that we qualify for 100% first year allowance. So what that means is that if we spend a sum, let's say £50,000 on a new car, then we get credited for that amount as a deduction in our tax computation for corporation tax. That's really good because most cars get around 18%, and there are differences, so I won't go into the detail depending on what type of car it is. But there are advantages there. It's largely a timing difference, so the real advantages come through as our cash flow. Now, here's the thing. Let's say you were to buy it on hire purchase. You get the tax advantage today, but spread the payments over the term of that hire purchase. That's when you can really accelerate your cash flow. If we look at it from a lease point of view, we pay a certain amount per month. We never actually own the car. Those payments are deductible for corporation tax, so we get the advantage that way. Let's move on and talk about payroll taxes. Most of us know that when we have a company car, if there's private use of it, then that constitutes what's called a benefit in kind. So here's where the real difference, I think, really exists between electric cars and other types of car. The government will look to charge you a percentage of the list price. That's the brand new price of the car, whether or not you buy it new or second hand. They will look to charge you a percentage of that car as a taxable benefit upon you if you have that company car. Now, for electric cars, the rate is 2%. It is significantly lower than cars fueled by other means, petrol, diesel, etc. But there's a catch to this, because it isn't going to stay like that. Over the next few years, the government have already told us that it's going to 3%, then 4%, then 5% by 2028. So one way to look at this, what was once a very good carrot is reducing. And it's clear to see that one day, instead of making electric cars an incentive, they will actually start to penalise us for not using company cars. But at the moment, at 2%, soon going up to 3% in 2025, it's still a significant advantage. Now, let me talk to you about what that 2% means. So again, if we use the example of a £50,000 car, just ease of numbers, then 2% of that constitutes £1,500. So that would be the taxable benefit that the employee who gets the car is eligible to pay. But also the employer then has to pay 15% of that, which is a further £225. So we're looking at $1,725 as an overall cost, and if you're the business owner, you will take that hit yourself as both the employer and the employee. It's significantly down, as I've already said, from other types of cars. Let's talk about VAT on the electric car. Well, if you buy the car, then unless there is absolutely no private usage, then you will not be able to reclaim that VAT. And for that matter, it is the same as any other type of car. If you're going to lease it, you can claim 50% of the VAT back, even if there is private usage as well. Okay, so that's the car itself, but let's talk about the running costs of the car. So we know that electricity is at least marginally cheaper than petrol or diesel, but what about the implications of the company paying for somebody to charge their car at home? Well, yeah, they can do that tax-free for business trips, or they can do it and deduct their own private mileage. So it works that way, but also you can allow, or you can pay for the employee to have a charger installed at the house, and again, that's a tax-free benefit to them, so that's quite a good advantage. But here's another thing. A lot of businesses now are looking to have electric chargers installed in their workplace, whether that's the office or the factory, etc. Now, if you do that and it becomes available to all employees, again, you can allow yourself or your team to charge at work against the company's electricity bill, completely free of taxation implications. So that's quite a good advantage as well. You may have heard about grants as related to buying electric cars. Well, I'm afraid to say those grants have by and large become a thing of the past. There aren't any grants available on the purchase anymore. So that's one downside, or at least that's something that used to exist that is no longer there. So let me conclude. Is it more tax efficient to run an electric car through your company? Well, I would say yes, undoubtedly yes. Are the tax savings what they were 2 or 3 years ago? No, they're coming down. I've talked about the concept of the government's carrot slowly becoming a stick, and I think that's the way we'll start to see it go. But at the moment, significantly reduced benefit in kind rates along with enhanced capital allowance rates. Then when you add into that benefits through being able to charge the car at home, those three savings together make having an electric car as opposed to a combustion car in your company still the right choice to make.